Hello, this is Robert. I'm a tax attorney here at TRP, and we're going to go over our tax relief program guide for the IRS for fourth quarter 2020. The 10 most common resolutions with free help from tax attorneys. Now, the free help, there's going to be free guides linked below to many of these programs and how to do them yourselves. And you can also post a question on this video, and one of our tax attorneys will answer. Now, this is by Tax Resolution Professionals. We're a law firm, and you can reach us at trp.tax on the web or 888-515-4829. That's 888-515-4TAX to reach us by phone. Here's the most common tax relief programs. And what we'll be doing is putting a timestamp below so you can click to go to the one that you want more information about if you don't want to watch the whole video. Number 1, offer and compromise. Number 2, currently not collectible status. Number 3, innocent spouse. Number 4, injured spouse. Number 5, penalty abatements. Number 6, simplified spread out payment plans with penalty abatements. Number 7, partial pay installment agreements. 8, audit reconsideration. 9, bankruptcy. And 10, do nothing. In the vast majority of tax debt cases, offer and compromise is the best solution if you qualify. COVID might make it easier for a lot of people and businesses to qualify if that didn't before. If you got a lot of other debts, though, and your tax debts qualify, bankruptcy might be a better option. You got a bunch of medical debt, other things going on, judgments, sometimes bankruptcy is better. If your debts expire soon, currently not collectible might be better than doing offer and compromise. And we've seen cases where certain firms will submit offer and compromises before they really should, and the debt just extends longer, the offer doesn't get accepted, and the person would have already been done with their case in some cases if they would have done currently not collectible instead. Sometimes a combination of offer and compromise on newer debts and bankruptcy on older debts works best when you owe a lot more than just taxes. Offer and compromise is settling your tax debt for less than you owe based on what the IRS thinks they could reasonably collect from you based on a combination of financial standards and your actual expenses. And really what happens for a lot of people, you just try to make their numbers, quote, zero out. At the end of the month, they're really not making anything after the standard, and you get a really low offer for $50, $100. That's what you try to do in most of these cases. So, should you do an offer and compromise yourself? Most tax attorneys and tax relief firms are just going to tell you no every time. And sometimes it's easier to do it yourself, especially if you don't got the money to do it. I don't recommend people wait around and then try to get the money together or change their job or something like that and then submit it. A lot of time you wait that long, you're not going to qualify anymore. So, here's some cases where you probably do not need help, and doing your own offer is easy. 1, Social Security, disability, or some other fixed income payment is your primary source of income, and you do not have any substantial assets. Grandma and grandpa making, a couple $1,000s a month on their Social Security, and that's their only form of income, that's fine. If someone has a really high retirement payment, they might not qualify, but most fixed income type payments, most of the time they're going to get it. 2, barely making it month to month or going in debt and do not have any assets. So, you have 3 kids and you make $40,000 a year, don't have any assets, you're probably going to get it. You submit those forms in, even if they're not 100% filled out correctly, they'll send you back what they need and it'll get through. And I'd be surprised you don't get it. Cases where having someone else do it is ideal. Self-employed people and business cases, or just self-employed businesses. Sometimes it's Schedule C type business, corporation, any kind of situation like that. You're probably better off having someone else do it. Assets that may or may not be excluded from the offer amount. We had a case where someone had a paid off house in Mexico and the IRS wouldn't accept it right away, and we had to appeal it and do all the stuff because he couldn't sell it, and eventually it got accepted. That might be a bit harder to do on your own. Higher income and a large balance. You owe $1 million and you make $150,000. That kind of case, definitely better having tax attorney do it for you. Or you just hate filling out forms. If you really hate filling out forms, you just don't want to do it, we're here to do it for you. We have some people where they aren't a fixed income or something like that. Sometimes their kid covers it and they do it for them. So those are the situations. You can kind of evaluate if you want to do it yourself or you want someone else to do it. The other thing is we can always pick up where you left off. If you submit it and you get stuck and you don't know where to go, someone could just jump into your case right there and pick up and finish it out. Currently not collectible status is effectively a payment plan for $0 a month. The IRS then can ask for financial data again at a later date. If income stays the same, currently not collectible status is generally renewed. They're going to be looking at your tax return each year to verify that financial data. Upside is the debt might expire before you are required to make any payment at all. The downside is if you make more income and the debts are not expired, the IRS might be asking for a payment at a later date. Basically, they see a tax return year or two from now, and oh wow, you make so much more money now. Hey, let's get an update from them and try to get them into a payment plan. That's what they do. So here's the most common reasons you might get currently not collectible status instead of an offer in compromise. Number 1, 3-year income averaging. For self-employed taxpayers, the most recent income might be low, but prior to that, it was high. Maybe you're making $2,000 a month this year, but last year you made 200 grand and you owe 50 grand. Probably not going to get an offer because the 3-year income averaging is thrown off. 2, not up to date on current year estimated tax payments. If it's October right now in 2020 and you have not paid a single estimated tax payment and you're going to owe again for 2020, well, if I file an offer today, all that's going to happen is it's going to get kicked out in 2021 when you file your tax return unless you're paying it in full at that point. So when you're not current on estimated tax payments, a lot of time you just put a case in a non-collectible and submit an offer the next year and include the current year's debt in that next offer. Substantial assets, but otherwise low enough income. So you got a paid off house, but you're only getting Social Security. Some of those cases, you can sometimes get an offer if the house isn't worth that much, but a lot of those are going to go to non-collectible because they're going to say in the formula, you could pay it off with the house, but you really just don't want to sell your house to just pay the IRS. And what happens is they do file a lien on the house, and that's in most cases, but eventually it'll come off when the debt expires. 4, if you don't want the IRS going through everything in as much detail, they're going to be looking in detail at your bank statements and everything like that. Some people don't like that. And if they request currently not collectible, sometimes they don't ask for as much information. And almost all the time, they're not looking at nearly as hard as if they were for an offer in compromise. Number 5, the debt is going to expire soon anyway. And watch out for companies still trying to send offers to raise that fee. If someone calls us, and it's 2020 right now, if they call us about a tax debt from 2008 and that's their only debt, the first thing I'm going to tell them is it's very likely your debt's going to expire very soon, or maybe it already has. So if I submit an offer, I'm extending the time period for that debt to expire, and I'm really just doing a disservice to the client in most cases because I could just put it currently non-collectible, wait a few months if that's the case, and it's done. So currently not collectible status, how to get it. This is what you do. You file your missing tax returns that are required and then submit a financial statement. It's going to be 433A or 433F, depending on the case assignment. Usually when it's with the general collections area, they want an F. When it's with the revenue officer, they want an A. And supporting documentation. Now, one other thing I should mention about currently not collectible status is if your debts expire, they do not get withdrawn in most cases. If you submitted the offer and it gets accepted, you can get the debt withdrawn as far as the tax liens are concerned. Either way, if it expires, it gets released, but withdrawn is something that some people might want to submit the offer for in some cases. So, see our more in-depth guide on currently not collectible status by clicking the link below. We can do it for you if you need help. If you're getting Social Security levied and you have no other income, just call in and get it done. When that's your only income, they're probably just going to release your garnishment, put it in non-collectible, and call it a day pretty easily. All right, innocent spouse relief. This one's harder to get, and I'm taking this directly from the IRS site on this section here. Applicants must meet the following conditions for innocent spouse relief. File the joint return with understatement of tax due to item errors. Erroneous items qualify under 2 conditions: failure by your spouse to report gross income or incorrectly reporting any deduction, credit, or property basis. Establish that at the time of signing the return, you had no actual knowledge or reason to know about the understatement of tax. This means that you did not know about the understatement, nor did you have any reasonable way of knowing. After taking all details of your situation into account, the IRS finds it unfair to hold you accountable for the understatement of tax. You and your spouse or ex-spouse have no transfer of property to one another as part of a fraudulent scheme. Fraud includes the IRS or any other third party. This is one of the harder things to get. Unless it's a really clear win, if you qualified for an offer in compromise anyway, we're going to go with that for clients. Offer is easier if you're going to get it anyway, and the financials make sense. So you can see our link below for more in-depth analysis and a guide on innocent spouse relief, but just remember, if you can get an offer, you might be better off sending that in most cases. Injured spouse relief. You just get your money back. Now, this is when a joint tax return is filed and the refund goes to pay an old tax debt for the other spouse. The injured spouse can then get their money back. You just file Form 8739. It's self-explanatory and probably don't need help from us. It's really just a simple process, and not that many people are probably looking for this, but this is technically a type of tax relief, so I'm covering it here. Penalty abatements. The first time is easy. These apply to cases where you pay in full or in a payment plan. Once you come close to paying off the first year owed in a series of years, you should request a first-time penalty abatement based on prior compliance. If you have a previously paid off year, you might want to request it ASAP. For example, you're paying off 11, 12, and 13 in a payment plan, but you just paid off 2010 in full. You might want to request a penalty abatement on 2010, the first-time abatement based on prior compliance. And this first-time abatement is a freebie. The other years will require, quote, reasonable cause, and that's sometimes very hard to prove. They're hard to get regardless of what some tax relief salespeople may say. They'll make it sound like, oh, we're just going to get penalty abatements in every year. No, I would say like 95% of cases, people are just getting that first-time abatement. They're not getting the other years. And you can see our guide linked below for more information on that. Simplified, spread-out payment plans with penalty abatement. Setting up a payment plan with the IRS will release any garnishments. And there's two simplified payment options right now that are going on. One is the under $50,000 balance. They'll spread it out over 72 months, and they won't put a lien on you. The other is paying off the debt within the collection statute expiration date with a lien. Now, collection statute expiration date is just the amount of time they have to collect, that 10-year period in most cases that they have to collect. If you offer a payment plan that pays it off within that period, most of the time now they're going to accept it. Now, this may change in the future. Last year, it was 72-month plans for balances under $50,000, and then $50,000 to $100,000. It was an 84-month plan with a lien. Now, they're just basically accepting almost any plan that pays it off within the collection statute expiration date, which is great for some people because it makes their case a lot simpler. So you want to see what penalty abatements you might qualify for as well. First-time abatements are easy, and if you already paid off a prior year before setting up your pay plan, you might want to request a first-time penalty abatement ASAP and not wait because that time period is going to go away. Now, the other types of penalty abatements are going to be based on reasonable cause, and those are hard to get. So we'll discuss those a little bit more in our guides linked below. Audit reconsideration. What it is. If you owe due to a previous audit and you did nothing about it before or have new information that may change the outcome, you might be successful in an audit reconsideration. For these types of cases, we strongly recommend a tax attorney prepare to do it for you unless it's super simple. And here's how you get it. If there's no chance you can have someone do it, but you have information that may change your outcome, it's worth giving it a shot. If the information is something that was not available during the audit and clearly demonstrates what was previously needed, you might not need anyone to help you either. Here's an example. You had repair expenses that were excluded because you could not find proof of them during the audit. You find the receipts in the back of a closet. Tally them up and send in copies with your total. Most likely, they're going to accept it and adjust your balance. If they don't, they'll send some paperwork back specifying what you probably should send otherwise. And if they don't, you can call the number and find out. See the link below for more information on audit reconsideration. Bankruptcy. Sometimes best for some people. Many bankruptcy attorneys will tell you to get a bankruptcy, while most tax relief firms and enrolled agents will tell you do an offer and compromise. Both IRS offer and compromise and bankruptcy use similar information to come out with a result. So the financial data they're using on both of them, the standards and things like that, are pretty comparable. Generally, if you would get a Chapter 7 bankruptcy, you would also qualify for an offer and compromise. Bankruptcy or offer. Here's some examples. Here's one where bankruptcy might be better. Taxpayer has a judgment against them for $500,000. They owe tax debt from 2015 and previously in the amount of $100,000. They have credit card, medical, and other debts of $200,000. So their other debts way outweigh their tax debts. That's a great scenario where bankruptcy might be the best one. Here's one where offering compromise might be better. The taxpayer owes tax debts for multiple years from 2019 and before. They have $150,000 in tax debt. They have $10,000 in medical bills. I'd try to settle medical bills for less and do an offering compromise for the tax debt. It wouldn't be worth it in most cases do a bankruptcy because it would just ruin your credit more. Combination of offer and bankruptcy might be best. Taxpayer has a judgment against them for $500,000. They have credit card, medical, and other debts of $200,000. They owe tax debts of $250,000, including the last tax year filed. So they file the bankruptcy. It's not going to cover all the most recent tax debts. And they're going to do a bankruptcy to get rid of their first set of debts, and then they can do an offer and compromise to get rid of the rest of it. You can also do nothing, and this is rarely the best option, but you can just do nothing and see what gets garnished. Most cases, not the best thing to do, but the IRS can't take from VA disability payments or federal payments that are deemed public assistance. So there's some cases where doing nothing might not really do that much. The debts do expire at some point. In most situations, your tax debt will expire 10 years from the date it was assessed, plus time that a bankruptcy, offer and compromise, and a couple other things may have been pending. Most people getting disability or federal assistance payments will meet the financial criteria for offer and compromise. So most fixed income situations, you're better off filing just to get it over with. File the offer and compromise, be done with it. But if it's VA disability or public assistance and it's federal, nothing's going to happen to it. It's just going to sit there. The easiest way to deal with tax relief? Have us do it for you. Call us at 888-515-4829. That's 888-515-4TAX. Or go to trp.tax/start. We order the information, check it all out, file what needs to be filed, and proceed on the best resolution. If we cannot help you, we'll tell you. There's no false promises for settlements. We only submit settlements that have a good shot at acceptance. And if you're going it alone, check out our free tax help guide at trp.tax/taxhelp and post a question to get a free answer from a tax attorney. You can also comment on our YouTube videos and an attorney will answer within a day or two. Thanks for watching and have a great week.